Hey, it's Lorne Andrews here from Dominion Lending Center's Expert Financial, optimalfinance.ca. Today we're going to talk about how to protect yourself when buying a home using bridge financing. Bridge financing, what is bridge financing? So basically, if I am currently a homeowner and I'm going to be selling my home and buying another home, you have a few options where those closing dates are going to be. A lot of times, traditionally, we want to sell our home and the house that we're purchasing, the closing date is going to be on that same day. What happens is my mortgage and everything I'm arranging for the financing, everything just gets switched over on that particular day. So actually that seems to be the simplest thing. However, if I want to close the property that I'm actually moving into ahead of time, I could do what's called bridge financing, which basically is a loan for the down payment. I can close that particular property ahead of time, and then I have X amount of time to move it, whatever the time period of the bridge is, to move into the home. So let's say if I take a 5-day bridge, that means I'm closing the home that I'm moving into 5 days ahead of time. Maybe I can do some painting, move my stuff in slowly, and then my home will close after. When my home closes, the loan actually just gets paid out. Why do people use bridge financing? One is they don't want to be rushed on closing day, and it allows them to get into that home to maybe do some renos or do some quick paints or stuff like that, or just take a little bit of time to do it. Probably the most important reason why one should consider bridge financing, even if there's not a desire to stagger the actual closing dates, you have to understand there's a lot of things that have to happen and have to all work and coordinate for your closing to actually happen. So let's look at the few scenarios. Let's take this family, for example. Closing was on a Friday. They wanted to have everything done on the Friday, the whole weekend, they organized, unpacked, and everything else. This is perfect. So both the closings of their purchase and their sale were happening on the same day. When a closing happens, you don't really see it, or you don't really understand in terms of what has to happen, but everything has to be coordinated perfectly. What happens is that you have to understand that your closing is connected to another closing, which is connected to another closing, which is connected to another closing, right? So you can be 5 transactions away. That person's buying this person's house, this person's buying that person's house, this person's buying that person's house, etc. And all those are supposed to happen all on the same day. So there's transfer of funds, transfer of funds, transfer of funds, transfer of funds. You know, people are saying, how come, when is my closing? When am I going to get my keys? Why is it so close to 5 p.m. as opposed to 2 p.m., etc.? So these are the things that has to happen. So what happens if 4 transactions away, there's an issue with funding? That funding, maybe they don't get the funding that happens, or there's some other reason that house doesn't close on time. So that person couldn't get the money to the next person, right? And then the next person's was counting on that money to give it to the other person, okay? And then what happens is almost like a domino effect. We have a whole bunch of closings that just don't happen because it's something that happened 3 or 4 transactions away. So how do you protect yourself with this? Bridge financing is a great way to do it. The cost of bridge financing, when we're doing it with a lender, a regular lender, usually maybe about $250, and then you pay per day amount of interest as far as how many days you want the bridge to do. But in this particular situation, let's say this happened on the Friday and I did my bridge financing. So I'm going to close my purchase on the Thursday with bridge financing. Well, what happens is my purchase closes, okay? There's no issue whatsoever. So the fact that if I can't get the funds to sell my home on the same day to do it, it's not a factor, because with the bridge finance, we've already shored up the down payment and the funding and everything else. So that's already been funded and closed on the day before. And therefore, I'm never going to really have that issue. I'm going to have the keys in my hand at the beginning of the morning so I can get my movers to move everything into that home. And that's basically really what you want for bridge financing. So when you're buying a house, yes, as long as you have a purchase and sale on both sides, okay? So for example, if I list my house and I buy another home and I have a set closing for that home, can I do bridge financing? Well, I just have to wait until I actually sell my home and I have a firm purchase and sale in my hand, and then now I have the bridge. So I have the 2 closings that I can now bridge and actually get the financing done that way. That would be how I would do it. Protect yourself. Like if you talk to many lawyers, they say please take bridge financing because there's so many things that have to be coordinated on their end. Some of the things, or many of the issues that happen with closings that do not happen on time, are not elements that they can control because it was 2 or 3 transactions away. Protecting yourself from bridge financing when making a purchase, strongly advised. Any questions that you have, comments, suggestions, anything else, love to hear them. We're here to help. Looking forward to seeing you on our next video.